Payroll remittances are a critical responsibility. For any business with employees, these are the specific funds that a company withholds from an employee's paycheck. Combined with the employer's own contributions, these must be sent to government tax agencies. Federal income taxes, state income taxes, Social Security, United States, Medicare, United States, Canada, pension plan, employment insurance. Failing to remit these amounts correctly and on time can lead to significant financial penalties and interest charges, creating unnecessary stress and financial strain on a business owner. Staying compliant is not just a legal requirement, it is a cornerstone of sound financial management for your enterprise. Calculating these taxes can seem daunting. Tracking these taxes can seem daunting. Paying these taxes can seem daunting. This is where a powerful accounting software like QuickBooks Online becomes an invaluable partner. Often referred to as QBO, is designed to automate many of the complex steps involved in payroll management. When you process a payroll run for your employees, the software automatically calculates the precise amount of each required tax and deduction based on current government regulations and the specific information you have entered for each employee. This automation significantly reduces the risk of manual calculation errors, which are a common source of payroll problems for many small businesses trying to manage everything by hand. Beyond the initial calculation, QuickBooks Online plays an essential role in tracking these accumulated funds. It does not simply calculate the numbers and forget them. Instead, QBO systematically records these amounts as liabilities on your company's balance sheet. Understanding your remittance schedule is essential for timely payments. These schedules are assigned by the tax authorities, not chosen by the business. Size of your payroll. History of tax liability. In Canada, many small to medium businesses are on a monthly schedule. Remit for 1 month by the 15th of the following month to the CRA. In the US, the IRS uses a monthly deposit schedule, or a semi-weekly deposit schedule. QBO accommodates these frequencies and will populate your tax center with due dates. Every time you run payroll in QBO, it performs crucial accounting entries behind the scenes. Debit, wages and salaries, expense for gross pay. Credit, your bank for the net pay deposited. The difference between gross and net pay. Withheld taxes, other deductions, is credited to payroll liability accounts. Payroll liability account example, federal tax payable. Payroll liability account example, CPP payable. These act as holding containers on your balance sheet for amounts owed to government. Exercise 2. Liability recognition. Task: processing a semi-monthly payroll for employee Sarah. Sarah's gross pay, $2,000. Federal income tax withheld, $400. CPP employee portion, $100. Question: which two liability accounts are credited and by how much to reflect what you owe the CRA? Automated liability recording gives clarity. No more manual spreadsheets or ledgers. Look at your balance sheet for up-to-the-minute payroll tax totals. This visibility is vital for managing cash flow. Anticipate payments and ensure funds are available by due dates. Goal: clear liability accounts to zero with each remittance, confirming obligations are met, and you're ready for the next cycle. When a remittance deadline is approaching, QuickBooks Online makes the payment process straightforward. To begin, navigate to the Taxes section and select Payroll Tax. In your Payroll Tax Center, you'll see a list of payments due. Select the specific tax item you wish to pay. If you've enrolled in the ePay service, you can submit your payment electronically, directly through QBO. This links your bank account to the tax agency for secure debits. Alternatively, if you pay outside of QBO, you can still record the payment manually to keep your records accurate. If you make a mistake, like an overpayment, you can record it as a credit for your next remittance. For underpayments, simply submit an adjustment payment. Two key reports are the Payroll Tax Liability Report, which details taxes you owe, and the Tax Payment History, which logs all your remittances. Running these reports before making a payment helps confirm the amounts are correct. To further avoid penalties, adopt a few best practices. Always reconcile your payroll liability accounts on your balance sheet before submitting a payment. Also, periodically double-check employee tax setups and consider enrolling in ePay for automated on-time payments. By consistently using these reports and best practices, you can transform payroll tax management from a source of anxiety into a routine business function. The tools in QuickBooks Online are designed to guide you toward compliance, helping you avoid costly penalties. Practice these steps in a demo account to build your confidence.